All right, folks, a very good evening to you all. This is Aviral from the Tradepsyche. Today is 16th of August, Saturday, and I welcome you all to post market analysis, outlook, and expectations from the market for the next week. All right, so in this video, basically, we'll talk about how the markets can be from the next week, what levels we need to take care of for the bullish scenario and for the bearish scenario, and we'll also analyze and see that what is the OI data which got built on Thursday, because Friday was the markets were closed on the occasion of 15th of August. All right, so we'll analyze each and everything in detail, that how the price action can be next week on different time frames, and in the end of this video we'll also discuss that what is the OI data and what are some of the crucial support and resistance zones for Nifty, Bank Nifty, and we'll also analyze that the how the other sectors are doing, like or IT, auto, metal, mid cap, small cap, right? So let's start the discussion. Okay, so first, in brief, we'll discuss once that is there any positive or negative news flow from the global scenario and from the domestic scenario as well. So from the domestic scenario, I think, but before starting the video, a very happy Independence Day to you all, right? Our honorable Prime Minister, he gave a speech, I think, on 15th of August, and probably that was the longest ever speech given by the current Prime Minister in all his addresses on the Independence Day. I think it was roughly around 104, 106 minutes, right? And there were very crucial things which he talked about in his address to the nation, and the one very positive and very, I think, positive thing he talked about is the reforms in the GST sector. All right, at the moment he spoke about it, all the news channels, all the media, they have started speculating on it, and the government panel, it has recommended the removal of some slabs in the GST, like the 18 percentage and 28 percentage. So either it will be a 12 percentage slab or a 5 percentage slab, right? So this news, specifically the removal of these two slabs in the GST, is anticipated and is taken. This news is taken and will be taken as a very positive thing for the markets, because first the government has realized that yes, the consumption is slowing down. Why they want to move almost 99% of the things from 18% or 28% to 12 percentage is they've realized that the personal tax, the indirect tax, the tax which the government collects on uh, electrical appliances or any of the thing which you go and which you buy in the market, it was very high. And seeing the current demand globally, right, seeing the current demand, because USA, due to the tariffs, the demand for Indian products will be decreasing, right? And taking into consideration the US and Europe's economy, their economy is not doing very well. So it is very natural the demand for Indian products, what the products we used to export, it will be very less, and which is impacting the sales of the companies which are exporting, right? Plus, moreover, the I think government has realized the domestic demand is also being decreasing. So on the backdrop of it, I think the government panel has decided to cut the GST tax rates. And what how it is positive for the markets, for the economy, is I'll tell you, when like, see, it is currently not final. It is the what is the news, what the news is being circulated in the markets. That one only I am telling you. But what the news channels and what the experts are saying, that most of the things which used to come under 18 percentage and 28 percentage GST tax rate, right, they will be moved under 12 percentage or 5 percentage. But some of the sin products like tobacco products and these cigarette slash pan gutkas, they will be moved to 40 percentage GST tax rate, which is fine, right? But the biggest thing is the tax, the GST percentage tax cut. So what it will do is it will make certain things very cheap, which will drive up the demand in the country. So the domestic demands is expected to go up. But keep in mind that these tax cuts, its effect, right, it does not come immediately. Yes, the markets can cheer for Monday, Tuesday, for a day or 2 day, but for a sustained effect, we need to wait for a quarter, because we have we already in the history have seen two very aggressive rate cuts from the RBI governor. We have also seen the personal income tax which we used to pay on the salary or on the income. We have seen that also, and now these GST tax cuts are also coming. So slowly and steadily, the steps from the government which are being taken to drive up the domestic demand, domestic consumption, these are in a positive direction, and hopefully this should be taken as something which can, like, positive for the markets, because when the foreign institutional investor, they will realize that yes, the government is interested in making the demand up. So then they will realize that yes, what they have been doing, essentially what they like, if you see FIS data from past 5 years, they are continuously from past 5 years on an annual basis they are selling in the market, Indian market. So when once they will see this, that yes, the government is trying to uh, you know bring up the demand, the domestic demand, bring up the consumption, they will, their trust in the government to drive the economy up, drive the economy more stronger, will come back. And the moment it happens, maybe they will try to bring back their investment from the very costly countries where the stock markets are at all time high, like the European markets and the US markets, right? So this is this is one of the most positive trigger for the markets, and it can be treated as very bullish for the markets. But let's see that how uh, the market in actual terms it takes it. This we will get to know on Monday morning itself. But from my perspective, I think it's a bullish trigger for the markets, for the economy. But as I'm saying that its effect will not be seen immediately, so we have to analyze that, you know, what extent, what levels will the markets take into consideration. See, what happens in economy, the stock markets are an indirect reflection of it, not a direct reflection of it. There are multiple more factors to drive the markets up, but this can be one of the biggest factor if we see a bullish move on Monday. From personally, from my side, I anticipate that yes, it's a good move. It's a good thought to drive the demand up, the domestic demand which had been lagging. It is a good move, right? Second positive thing from this was from the domestic perspective. Second positive trigger for the markets can be the Trump and Donald Trump and the Putin meet. So what Trump essentially said is that the extra 25 percentage of tariff which we were going to apply on India, because India was you know bringing in India was importing the cheap Russian oil. That issue has almost been solved, because I think yesterday night we had a meet, the Alaska meet, after decades, right, after decades, Putin came to Alaska, right, and the conclusion of that meeting came that Trump, as per Trump, right, because he is not a stable man, right, because he, the one moment he'll say that things are very good, the other day, the other moment he says that things are not going as per me, and I will put more tariffs on countries, right? So he's a very volatile man. But as per the current situation, what he said after the Alaska meet is, he said basically that I do not now see the need to apply more tariffs or to put more tariffs on India. What essentially he proposed that additionally 25 percentage tariff he will apply if India does not stop importing cheap Russian oil. Right. So now the Ukraine Russia war is on the brink of an end, and this can be a very, very positive trigger for the global markets as well. But the markets, they barely run on the scenarios of wars. Wars can be something as a shock to the markets, but in the long run, the markets always and always they run on valuations. So if we talk about valuations, the valuations are very, very high in the US markets. right? The US markets, they do not have any space to go more up. The more they go up from this moment, I think the more costly they will become, and US economy is not justifying the US stock markets. So there can be two possibilities, either, and one more, so these two things. So about the possibilities, I will come to that part. But these two were the positive triggers, and from my perspective, these two can be a significant positive trigger for the market. But the one negative news which came, I think, on Thursday was the data, the US data, and the inflation was again started to go up. There was no growth in the GDP. When the last US GDP data came in, it was from two straight quarters GDP data. US GDP data is negative. So technically, US GDP is in recession. But when US GDP is in recession and the inflation is increasing, it is called a stagflation. So stagflation is something which is not taken as a positive thing from the perspective of stock markets, because when stagflation comes, the if the stagflation persists for a longer period of time, the stock markets, they tend towards a crash, because the inflation is rising but the economy, the GDP is not rising. It means that the pockets for the common man, they will start getting empty, because they are not earning anything, but the effect of tariffs due to which the inflation has risen, it is seen on the US inflation, right? So I think on Wednesday, or on, I think, Tuesday, some US data came in which indicated a cooler data, and the stock markets cheered on the backdrop of it. But I think on Wednesday or Thursday, this data, I think, PPI, and I think, core PPI and PPI, it came as hot. Hot means the inflation, it rose, right? So that data is being taken as negative from the markets, because I think the gift nifty is, as you can see, down 37 points, and the gift nifty closed, I think, around Thursday night, because Friday was a holiday, and it did not open Friday the whole day, and it will not open Saturday. It will open on Monday morning 6:30 a.m., right? So after everything, I think after Thursday, the first positive trigger was this GST tax rate cut, and the second positive thing was the Alaska meet. The only negative thing in the market is the US, what do you say, data, US inflation data. But now, talking about the two possibilities, why the Indian market was falling from the past 6 weeks is the fear of Trump tariff. Now it is started to going start it has started to go away, and this can be treated because there was no other reason to fall. One, the foremost and the prior reason for Indian markets to fall was valuations. Currently, the valuations are still also high. We have a Nifty PE of around 21, 22, which is not cheap. Cheap PE, you can say, roughly at 17, 18, but the PE of 21 is not very very expensive. So we have a good space to go up on the upside, because we have been falling from past 6 weeks, and the seventh week, the last week which just passed by, it was the first week in which we closed in green. So we snapped a uh, six losing weeks by a seventh green closing week, right? Green week on closing basis, right? So let's so this was all about, so about the two possibilities. We will definitely talk on it once we go to the chart, but these were some of the negative and positive triggers from the global perspective and from the domestic perspective, right? So I hope you understand the gist, that overall things are positive for the Indian stock markets. If we specifically talk about Indian stock markets, things are positive. I am not yet saying that very very positive, because we have not seen the reaction from the investors, because the gift nifty is closed from past 2 days, and the real reaction we will see only in the pre-open or in the gift nifty Monday morning, right at 8 o'clock roughly around. So let's start the discussion on charts. I'll straight go to the charts, and let's start discussing that what can be the next week and how we can trade it. Now, for the short term, we declared that we will roughly make a bottom around 24 300 200 zone, because it's a good demand zone, and we'll also discuss that why it was a good demand zone, and why the message from my side came that yes, we can go a little bullish from here. Little bullish, I specifically mentioned on the Twitter that short term bottom has been formed, right? So now let's once discuss that what happened on Thursday, since it was Nifty expiry, so the effect of Friday, it came on Thursday. It was a proper sideways trading session. If you see, we opened roughly around, at this point we opened flat, and the whole day we spent in a box range, right? So let's now start the discussion. Let's go to weekly time frame, and I'll remove all the levels which were marked from Wednesday's analysis, right? So if you see here, we had a 6 back to back consecutive red weeks, wherein the first half of the week we went above, and the second half of the week we saw some profit booking, right? So now the markets have um you know snapped that 6 week losing streak, and the seventh week is finally a green closing. Now there are two things you need to know here. See, whenever the markets they top out brutally, you see a candle of this kind. You see a red candle of this kind, wherein the prior 3 weeks is retraced by one candlestick. We never saw something like this here. So this was a technical sell. This was not a valuation sell. This was a sell on the backdrop of the tariffs, the slowing demand, the slowing Indian economy. So now, as the two biggest fears for the Indian stock markets were the slowing economy and the second were tariffs. Both of them have gone away now. So technically, we do not have anything negative to factor. The only negative thing to factor were the, what do you say, the earnings season, the quarterly earnings we have. And I think the season is almost over now. It started from, I think, end of the July, I think, 20 of July, right? And it has now almost ended, and the market has seen and it has factored each and every negative result, whether you talk about flat Reliance earnings, whether you talk about flat IT earnings or flat banking earnings. It has factored it all. So now, fundamentally, we do not have anything negative to factor other than the costly valuations of the Indian market. So it will be very crucial to say and to see that what reaction the market shows on the first day. If the market shows a good reaction, that momentum, we can see a continuation. Now, once we will discuss on monthly time frame, just to make you guys see that what is the picture. Monthly, we are forming a hammer here, right? So every time in the past, if you see monthly, if at all the markets come to the monthly 5 EMA, it has always taken a bounce back. So even if you see the 2 months or the 4 months here, the monthly 20 EMA, it bounced back off 20 EMA. And here also, the 6 month losing streak, sorry, 5 months losing, I think, 1 2 3 4 5 5 month losing streak was countered by a very bullish monthly candlestick which took a pullback from 20 monthly EM. So currently we are seeing a bullish a hammer, red hammer, which can be seen as a little reversal in the trend from the monthly time frame. But from the weekly time frame, if we discuss, we can definitely, because from the weekly time frame we broke 20 EMA and closed below weekly 20 EMA. So the target naturally was the weekly 50 EMA. But please remember this one point in stock markets, that a good fall only comes above a good rise, and a good rise only comes above after a good fall. So we have seen a very good fall, and now some of the people, they might ask that why we did not go and we did not touch the 50 MA. You need to see that how much the markets have traveled. If I take a point of 100 and a point of 0, if the markets have already traveled from 0 to 100, it is a very less probability that the markets will go to 150, right? In order to go to 150, we have to either give a pullback, a retest, then we can go at 150, or the market should consolidate for a very longer period of time at level 100, then and only we can go to 150. So you need to see that from where the markets have coming. So now if you see, we have been falling from a long time, and the bears, they were actually exhausted from this point. If we would have been, roughly consolidating at this point, then I would have said that yes, there is a good probability that yes, we can hit the weekly 50 ma. But the bears, the the negative price action, it is kind of exhausting at this point of time, because in the history, in the very near history, I cannot see anywhere back to back six red weekly candlesticks. That's why we formed a bottom here. The second reason why we formed a bottom here is we were very near to 200 dema. So whenever the markets falling from the top, it has come near to 200 dema, we have seen a very good pullback in the past, right? If you see this stock market fall, we have seen a spring price action. If you go more in the past, 200 dema, a strong pullback. And as I always say, good rise always comes above after a good fall. So this was a good fall, this was 200 dema, and we saw a sharp rise at this point of time. So the same scenario is currently forming. We came from the top, we have been falling from past so many sessions, past 6 weeks, and the markets really, they cannot, they could have done it, but it was a very, as I mentioned, that you can consider this point as 100, this point as 0, and this point as 100. In order to go to 120, 130, the markets needs to consolidate at this point of time, at this level for a longer period of time, to go further down. So from this point, there are two possibilities. Either the markets will consolidate at this period of time, they will form like this, and a bearish flag pattern can form, right? Or if the markets really, they take these two things as very bullish, we will see a good recovery. And the real recovery, if at all, these small red candlesticks is recovered within one candlestick like this, you can see this level and this level. But if you see this small recovery, like within 3 next weeks, we are only touching 25,000, then it can essentially form a bearish flag and pole pattern, and we can see the continuation. So how you will analyze that the pullback now, the bullish pullback now, is a strong one or a weaker one, is we need a big weekly candlestick like this to scare the bears away. Okay. So now we have to measure the intensity of the pullback to get to know that what kind of a pullback is this. Is this a real bullish pullback and we are poised for new all-time highs, or whether it's a slow pullback and we are poised for a next wave of the downside. Okay. So from the price action perspective, just understand this one principle, that there is this one level and there is this second level. We have traveled from 0 to 100. The markets cannot suddenly go to 150. Even if it goes, it will be a false move, it will come back to 100 once again. So now in order to go to 150, we have to either consolidate at 100 and then go to 150 to 100, or we have to give a pullback and then we have to do this, right? So now if it wants to go to 24,000, 23,000, so to go further down, we have to either give a pullback and then go, or either we have to stay here for a, roughly 3 to 4 weeks of time, right? Now let's talk about the levels. I've talked about the price action, let's quickly talk about the levels from weekly perspective, because it's the month, mid of the month. We'll not talk about monthly that much. We have talked about that monthly analysis in my the start of the month. I will attach that video here. But essentially now the lowest point is 24 340 or 350. This is a prior 2 weeks low, prior last 2 weeks low, and this is a crucial demand zone for now. If this gets broken down, I am not anticipating a breakdown of 24 300. Even if it gets broken down, so the next support level we are seeing in the markets is 24 200, which is 200 dema. So in the next week, even if we, let's suppose, somehow break down 24 350 or 300, the level of 24 330, right? So we will face 200 dema, and we might go slightly down towards it, but we will see a sharp pullback from this point, right? So let's go back to the weekly time frame and discuss that what can be the price action. So this is the first week, and this is not a weak candle, this is not a weak green candle. What the markets were taking a resistance from so many weeks now was weekly 5 EMA. We went till weekly 5 EMA, but the markets were not able to go above it because we had two factors. We had the Alaska meet, and we had something. The markets probably they must have known in earlier. They must have already known that something positive is gonna come, but they were just waiting for the confirmation from the government. Now they have gotten the confirmation from the government. We might see a bullish price action next week. So the ultimate trigger for the bullish price action next week will be the zone of 24,700 and essentially 750. This zone, if the markets take out this small zone, the markets are poised till 25,000, right? So we will definitely capture this 300 to 50 points of move the moment we see a daily closing above 700, 750. So this I am saying to you very very clearly, that if we sustain for a good amount of time above 24 700 or 750, we are poised for 25,000 and higher, right? So please do not stay in shorts if at all we are above 24 700 and 750. So above 24 700 and 750, the first level, because between 24 700 and 25,000 there is no resistance for the markets on the weekly time frame, right? So once we do 25,000, we and we cross above 25,000, so second resistance level will be 25 to 50 essentially, because this is 2 weeks touch point. So 25 to 50 is a point where I'm seeing the markets will stop for the next 2 3 within the next 2 3 weeks. We might see a pullback, small pullback at this point of time, and we might go like this or we might go like this, right? But essentially what I'm saying to you is, if it all by any chance Monday, because Monday's opening will be very very crucial, if we sustain about 24 700 750, please do not stay short in the market. We will definitely catch this move till 25,000 and 25 to 50. It will be a systematic trade. It will definitely have a trigger. The trigger is, we will definitely see on the shorter time frame what the actual trigger is. But if Trump goes back on applying tariffs on India, then there is a possibility that yes, we might break 24 330. The moment we do this, the next level will be 24,000, because 24, but between 24 330 300 and 24,000 we will see a small support at 24 200. But if at all we break 24 330, we will definitely gonna see the level of 24,000, right? So the no trading range, we will definitely derive that from the daily time frame. But yes, the upside and the downside, we have these two triggers: 24 750 the level, 700 750 the zone for upside, and the zone for 24 the zone for the downside, the level for the downside trigger will be 24 330, right? So maximum range for the next week I'm seeing is 25,000 and 24,000. So 1,000 point range I'm seeing, and we till the next week we should stay between this level, right? From the price action perspective, if the markets are not yet sure that they want to go up, we might see a consolidation here, or we might see a kind of base, like this U-shaped recovery. So I'm just telling you the probabilities, because the stock markets, the trading, it's a pure game of probabilities, and you just have to figure out the highest probabilistic outcome, right? So talking about the two probabilities now, on the first probability is we should break the level of 24 750, or the second probability from my perspective is a consolidation. I do not see that the markets they will break. I am not expecting the markets to break the level of 24 330, right? Let's go to daily time frame and let's discuss. On daily time frame, we have this very very essential trend line coming from the top, right? And once the market breaks this trend line, it will be a kind of bullish flag and pole structure, which is this is the flag, and this can be the pole, right? So I will try to make you visualize that on the larger time frame what price action we are trying to form here, right? If you observe keenly, we have this trend line here from the bottom, and if you observe keenly, we have this kind of trend line here. So this might be a channel. uh, we might get a support from this point, because that's how trend lines are formed. So if you want to anticipate the price action, so the next bullish case, the bullish rally for me will be something kind of like this. And this 6 weeks of following the markets needed this relaxation, because if you see from the price action perspective, see whenever the markets, because we were in a very good bullish momentum, and this rally, this is this rally, what I'm talking about is this one. We were in a very good bullish momentum, right? And what the markets did is, what we did is we snapped this bullish momentum and we saw a fairly rough amount of profit booking from the top because of the valuations. So it is not possible that within one rally we will do this, because the Indian markets are not that bullish as of now, because the economy was struggling. So in order to cross this point, the market, as I am saying back again and again, to cross any big resistance, the market has to take some resistance or some time period of consolidation at this point of time and then break out of this zone. So this is exactly what we are seeing, and this is the perfect cool back before this rally here. All right, you getting my point, guys? So this was the perfect 6 week of cool down which the markets essentially required in order to move up. Now for the coming in the daily time frame, the daily candlestick is the closing on Thursday was not that much bullish, right? But let's see the candlestick which forms on daily time frame on Monday. It will be very crucial that what kind of candle and what kind of price action we see. But please take care of this trend line, which is coming from the top. The moment we break this trend line, we might see a sharp short covering till 25 to 50. Okay, so as per the price action, if you take my take, let's draw this trend line once. All right, and we are very much near to this trend line. So let's suppose if the markets are opening around here, it will try to sustain at this point of time and it can break out. This is one probability. If the markets try to again take a resistance, the resistance will only come from 24,700 and it can again go like this, right? But since this is a trend line and this will be the third touch, generally the trend lines, they do not break in the third touch. But if it's supported by some policy change or some domestic or global trigger, it can change. So there are two possibilities from here. Either the markets will go to 750 and take a pullback here. If the markets are really bearish, they will not break the level of 24,500. So 24,500 is a short term support. We will definitely discuss it on the early time frame. But if at all we take a resistance, the 24,500 can be a good ideal point to again go long and trade the breakout of this trend line. Okay, what I am expecting from my side is the break of the levels of 21st and 50 700, break of this zone, because the break of this zone, because the markets were essentially, they were very confusing in this point of time, and the moment we do this, the markets will get a clear strategy to be traded like this. Okay, so you just have to take care of this one zone, which is 24 700 and 750. Let's go to early time frame and discuss that what we can expect. Now a short term support, I will be placing it at 24,500, but the moment we break 24,500, we see a early closing below it or we see a daily closing below it, we will be poised for 24,330. And since 24,330 has been touched only twice here, again if at all we come here, I expect a bounce to come here from like this. So don't be scared if the markets are coming to 24,330, we might see a bounce from here, but the bullish trigger for the markets will only come above 24,770. I am saying that the markets will treat the domestic bullish news as positive. That does not mean that the moment markets open, you will take a future buy, Nifty future buy or Nifty call buy. No, let 24,700 750 be cleared, because it is the point of trend line also. The moment we move slightly above it, small retracement to this trend line and we can trade this move. Understanding? Right? A small short term base or a support I'm placing at 24,500. If at all we are breaking 24,500, we will go till 24,300 330, but I doubt that we will break the level of 24,300 330, right? Let's go on 15 minutes time frame and we'll discuss that on the basis of opening how we can trade the markets. See, the markets will factor the bullish news if at all we open a very good gap up. So the markets, if at all we are seeing a good gap up here, let's suppose that we are opening at 24,750. The markets, if the news is very bullish and the markets are very optimistic about the policy change, we should not cover this bullish gap up. If this bullish gap up is being covered, it can maximum max to max get covered till 24 prior day closing, which is 24,600, right? So we will definitely mark the prior day closing also. So if at all we open a very big gap up, just wait for some time. Don't enter straight away, enter in the market. Just wait for this zone, 24,700 750. I will definitely give you the trigger in the group, in the telegram group which I have, right? But if at all we open a very big gap up, don't straight away enter into longs. Wait for a small pullback or little sustaining at this point of time, then we can enter longs here. Getting my point? If at all we open flat, we do not have to trade the market until 750 is getting crossed. If at all we are opening a very big gap down on any, I am not expecting a gap down, but if at all we open a good gap down, the things can change for a certain period of time, because we have a trend line coming from the bottom. If this gets broken down, the markets have closed essentially on support. If this gets broken down, I'm seeing two levels here, 24,500 and 24,330. But as I'm saying, even if we do a move like this, 24,300 will be again a point of demand, right? So this was the price action. This is each and everything. If the markets are opening flat to gap up, my point will be, my strategy will be buy on dips. But if at all they are opening a very big gap down, I will be sell on rise till 24,300, but I will trade the bearish move till only 24,300. I will not trade the move, or I will not be in shorts when we break 24,300 and go till 24,200. We have to be very careful, because every time the market has gone down, market has taken a strong pullback, because this is a zone of demand. All right, traders, you have got the idea. Let's okay, I have not opened the banking. Let me open Nifty Bank. What the Nifty Bank can do essentially. From weekly perspective, it's a picture perfect chart for Bank Nifty. Okay, Bank Nifty is perfectly taking a support from weekly 20 EMA, right? And if someone has a doubt, this is 5 EMA, this is 20 EMA, this is 50, 100. I use 5 moving averages, and this is 200, right? So the banks, they also have a good trend line coming from the top, and the moment Nifty Bank crosses this trend line, this will be very bullish. So I'll try to bring back the levels for Bank Nifty, because Bank Nifty does not require change in levels again and again. So Bank Nifty, I think, okay, let's form some fresh levels only. So for Bank Nifty, the story will be same. The point which will the level which will be crucially very important, and very will be very important and will be very crucial on the downside, is 55,000. The moment 50,000 breaks, 55,000 breaks, we will be poised for 54,000 and 53,000, and this can essentially take Nifty to the 24,000 or 23,500. But in the banking sector, there is a positive news which I forgot to tell you in the starting. S&P has upgraded the Indian banking financial industry. It has upgraded the credit rating, I think, stable, to, I think, from triple B, I think it has gone to double B. It has gone to stable. And the positive news, if it all it comes after a big bearish rally, it can be a good bullish trigger for the markets. I have explained this topic multiple times, uh, right? So the crucial level for the upside, for the downside, I have told you, for the upside is 55,600. The moment we will cross 55,600, we will be poised for 56,000, and we will be poised for 56,500. So each and every 500 point you will see a resistance on the Bank Nifty while going up. But Bank Nifty has shown a weak weekly candlestick if you compare it with Nifty, right? So let's see how Bank Nifty treats it. We have discussed the downside and upside levels both. So from daily time frame, Bank Nifty is basically trying to form a base after this trend line. So as I said, the price action, if we are traveling from such a higher point to the lower point, if you consider this as the point of 0 and if you consider this as the point of 100, so you cannot come from 0 to 100 and then again keep continuing go like this. We can do this, it's a game of probability, but it is a very least probabilistic move. So either to now to go be to these levels, either we have to survive at this point for a longer, like we have to be sideways at this point of time, at this point of range or level, or we have to give a pullback and then again come, right? So this looked like a very overstretched bearish rally and we had to take some time here. So either this is a base building or either the markets are waiting to go up now, right? So we have essentially discussed, and this is a zone wherein the markets were very confused. One day red candlestick, one day green candlestick, then again red, then again green, then again two red, and then again green. So in this point of range, many traders were trapped, the ones who trade Bank Nifty, and now essentially we can see a good pullback from here, right? So the upside levels for the next week, I'm expecting if at all we cross 55,500, we can see 56,000 and 56,500. But above 56,500, there is essentially no resistance till 57,000 in Bank Nifty. All right. So let's go to 15 minutes time frame and let's see. So the no trading, okay, the no trading range for Nifty is, from my perspective, it will be this range. I will not trade for a directional trade in this range, particularly between 24,330 and 24,740. Got it? So for from bank Nifty's perspective, the no trading range will be 55,000 and 55,600. Above this we will see a bullish move and below this we might see a bearish move, right? So let's see how the markets treat the banking sector also. Nifty auto, beautiful price action, and something this was essentially uh, I have updated that Nifty auto is poised for a very good bullish flag and pole breakout, and Nifty auto can essentially do this uh, price action. All right. So Nifty auto was in a very tight range for a very long time. I think from the period of, I think, roughly May till, I think, August. So the roughly this period of 3 months, Nifty auto was in a consolidation. It was waiting to go up. Now 24,250, the move above it can take Nifty auto to 25,000 and 27,500, right? So I'm not at all bearish on Nifty auto, I'm bullish on Nifty auto. Nifty IT, it is seeing to bottom out, and that's what why I'm even bullish on Nifty, is because its components, its sectors, the sub components of Nifty are also showing a very kind of bullish price action. Nifty IT is not showing any bullish price action, but it is kind of showing off a bottoming out pattern. Nifty metal, if you see Nifty metal, also it had corrected, I think on it had corrected a good amount, but I think if at all the markets, if at all they are getting treated as positive, Nifty metal also can witness a breakout and we can target some of the very good stocks from here. All right. So this was it for the traders for the next week. Each and every single point I have discussed here, and I hope you have got a good understanding that how you can trade the markets. Currently the markets are at 24,630. We have to wait for a breakout of 24,750, the level of 24,750. The moment we do that, I think the biggest contributors to the Nifty's new bullish rally will be IT and auto, because these are the two sectors which were underperforming the Nifty and the banking from a long time, and also the metal. These three sectors can essentially uh, contribute to the new bullish rally we are expecting in the markets. And to be for on the positional basis, what new targets I'm expecting from Nifty within next 1 to 2 months will be: firstly, the target is 25,600 and I'm expecting a target of 27,500 by the year end, and 30,000 I think by next roughly around next year end, right? If the India growth story remains intact, if we see a very bullish policy framework from the central government. All right, traders, now this was a complete in-depth video analysis for the next week, which you can have it. If you have liked the video, leave a like. If you have liked the content, show some support by commenting on the video. The more reach I'll get, the more I'll be able to help you guys. All right, be safe in the market. Cheers, good evening.